Manishi Ray Chaudhary is with us. He's Asian equity strategist, Equity Cash Asia Pacific at BNP Paribas. Manishi, I think we are done with the earnings season now. Finally, it's an extended one as always, the financial year. What have you made of it? And, I think last week we had the head of research from Motilal saying that actually total earnings expectations for FY24 on the Nifty have moved down by just 1%. Although, at a stock level, especially outside of the Nifty, we've seen some meaningful upgrades and downgrades as well. But what's the overall sense?
Absolutely. I think over the last 1 to 3 months, the earnings downgrades, as far as the consensus EPS estimates are concerned, they're down somewhere between 1 to 3%. Now, there are some sectors that have moved up. Banks are one example. Industrials is a second example. Select automotives is a third example. And there are some others that have moved down and those have taken away from the earnings upgrades. The most important one that comes to my mind are IT services and a few other sectors which are sort of globally linked. So it's kind of a mixed picture as far as the earnings season is concerned. But I think investors would have to remain focused on those sectors which are seeing some kind of an upward earnings estimate trajectory or earnings inflection, as we call it.
Because it's top of mind right now, I wanted to check with you. There are many of these spaces which are coming up in a big way. I mean, we just had a chat with the management of Inox Wind, where they see renewable energy, green energy as a huge potential for them. They spoke about, seeing record high earning, becoming net debt free very soon. So these are spaces that are emerging and perhaps a great potential for investors as well. Your thoughts here, and as an investor, would you be buying into any of these names?
I think green energy, not just in India, but all across Asia, all across the world, would be a durable and sustainable theme for the foreseeable time horizon. We know of the net zero targets that pretty much all the Asian countries are signatories to. We know that China has the target of achieving that by 2050, India by 2070, and so on. So I think renewable energy, or even electric vehicles, which are an integral part of that, those would remain durable themes going forward. Now, in case of India, there unfortunately are not too many listed plays at this point of time. You have many more of them in China and Korea. So, our focus as far as the Asia model portfolio is concerned, we do have a strong focus on that area, but most of the stock selection are actually in North Asia rather than in India.
All right. Hi, Manishi. Good morning. Manishi, everyone's talking about what to buy, but what are you not very bullish on? What do you believe should be at the touch me not sector as of now, if you'll have one?
I'll name two of them. Number one, the consumer staples sector, where I think the earnings numbers that were reported for this quarter were okay. But if you look at the commentary that the companies provided for the medium term, they were a bit of concern on account of the continued pressure on incomes, both in rural and semi-urban areas. And of course, the valuations. I mean, if one looks at the typical frontline consumer staples stocks, the valuations have remained sky high. And given the uncertain growth environment, it's not really our cup of tea at this point of time. The second one I would think about when it comes to sectors to avoid are possibly metals, and other commodities, where we are seeing the sort of a decline in commodity prices, which is obviously good for India from a macroeconomic perspective, but clearly not good for that sector. So, those are, sort of a top of the mind recall as far as the Indian sectors to avoid at this point of time.
By the way, you said consumer staples, right? So got numbers from Page, for example, recently. We had the management of Stovecraft just right now talking to us about, some sort of slowdown in the overall market out there. Do you reckon as we head into the end of the year and the big election season gets underway, things will improve at the margin, or What's your sense? And are these good levels to accumulate some of these names? Yeah.
Right. Now, that's an interesting point because, I mean, one does tend to see in a country like India some degree of consumption incentives being handed out in an election year, possibly as we get closer to the election. But, it's like, I mean, while it can benefit some of the second or third tier consumer staples companies, for the large companies which most of our foreign investor clients are interested in, I think at the margin that might make only a minor difference. And of course, as I said, valuations do need to correct significantly, either through a time correction or through absolute corrections, before a foreign investor would get seriously enthused about that space.
So, a couple of these consumption pockets have done really well. Whether you look at, I'm talking about the premium end, whether you look at real estate names. I mean, we were just referring to how Soba is up almost 8% after reporting record numbers this time. Then you look at, the premium end in the auto sector, something like an M&M. So that part of the K is doing really well. Is there more scope here in autos, real estate and the likes? And if yes, where would your preferences lie?
You, in a sense, just hit the nail on the head. About a year ago, we came up with a report that was, basically we created a basket that's called Affluent Consumption Basket in India. It did well, quite well for the second half of 2022, and then took a breather for a few months in late 22 and early 23. But I think that particular theme is now beginning to play out again and will continue to do so for the foreseeable time horizon. In that space, what we call affluent consumption, which is, for lack of a better word, the upper arm of the K, that's doing well in India. There are job creations that are happening in urban areas in the service economy. And I think, that's likely to stand many of these companies in good stead. We are focused on those companies which are not only market leaders in their respective segments, but also as a consequence have pricing power, which translates into return on equity significantly higher than cost of equity. So, I think that space is something that we are clearly focused on.
All right, Manishi, a final question before we let you go. What's the view on IT? The street is split down the middle. In the last 1 month, in fact, the Nasdaq has done well, some kind of rub-off effect over here as well. But the fear is there'll be a slowdown going ahead. But I think you had indicated with a longer time horizon, you'll be a buyer. Hold on to that view?
I still hold on to that view. In fact, about a couple of months ago, we reduced our exposure to Indian IT in the Asian model portfolio, but we didn't go out of it entirely. We are still focused on the top-rung frontline IT companies. We are seeing that many of them are benefiting as a consequence of deal wins. Many of them are actually able to sort of reinvent themselves and step into newer areas. So I think, while this particular result season has not been too good for them, some of them have talked about ramp downs by important clients, but we think that's kind of a temporary phase. So, while we have reduced our exposure somewhat, we have not stepped out of the Indian IT service space entirely.
Okay, all right, Manishi, always good hearing your thoughts. Thanks so much for stopping by and filling us in with all of those details. Wishing you a good day ahead, and we look forward to having a chat with you in the near future.
Thank you.